Scott, Mike.
Good morning. Good morning.
Hi,
Good
guys.
morning.
Hello, everybody. Who can
Here's
hear me?
How
Bob.
is everybody today?
I'm good.
How are
I'm,
things?
Good morning.
I'm happy. It's been in the 60s here all week, which was negative 20 last week. So I'm really happy.
Yeah, we're up in the 80s a couple days ago.
Holy crap, fill the swimming pools.
Yeah, really.
You guys will be in tornado season here pretty soon.
I'm here to tell you, I'm heading to Florida
Are
in
you?
April. Yeah,
Where
gotta
you
get
going?
out of it. Just Port St. Lucie is where we'll end up.
Oh, that's
Got a
nice.
95-year-old aunt down there. I'm her godchild, and she can't wait to see me. She thinks she's gonna kick the bucket any minute, so
Oh,
I'm
wow.
one of her favorite.
Kick the bucket.
Oh, no.
Well, hopefully none of that happens. We don't want any bucket kicking.
Nope.
So
I
No,
go
we
see her
don't.
about every year, 18 months or so.
that's cool.
They paid the check.
How old is she?
Excuse me.
She's 95.
Oh,
Oh,
wow.
wow.
That's what Jan's parents are. They're both still kicking around.
Yeah.
Yeah,
Yeah.
one of them just got kind of sick, so now we're gonna have to put him in an assisted. That's what's been going on the last month. So, but they made it independent for 95 years.
Congratulations.
So that's
to
pretty
them.
amazing. Yeah.
Yeah, it really is.
Well,
She's going strong.
obviously, yeah. Does she live on her own or is she in a home?
Yeah, no, she's on her own. She's got
That's
a
amazing.
daughter that lives down there, kind of checks in, but daughter's got cancer and her
Wow.
own battles to deal with. But yeah, she's
Well,
a strong-willed lady.
obviously. Well, hope you have a good trip. That'll be good. I'm gonna get rolling because we got a lot of stuff. Talk about a lot of things to look at. Um, so when I was kind of thinking about today, I'm thinking, what do I title today? And I have to title it Bizarro World because I kind of feel like I'm in a bizarro world because so much stuff goes on every day now that it's just amazing. So um, let's start with some economic news and what came out recently was household debt. And we've talked about household debt. The total amount of household debt in the U.S. has surged to a new record level again. This quarterly report on household debt and credit, the New York Fed says total household debt hit a 20-year high, 1804 trillion at the end of Q4 2024. That's an increase of 93 billion on a quarter-over-quarter basis and 3.9 trillion surge since the end of 2019. Mortgages make up most of the U.S. household debt, staying at 13 trillion by the end of December last year. Auto loans 1.66 trillion, followed by student loans 1.61 trillion, credit card loans 1.21 trillion, and others at 550 billion. The New York Fed data also shows Americans are struggling to pay off their credit card and other types of debt. Delinquency rates are on the rise, with 11.4% of credit card balances having been left unpaid for at least 90 days. So again, we've got to remember that we're a consumer-based economy, and 65 to 75% of our economy is based on consumer spending. So always keep that in the back of your mind. This debt that's piling up from a consumer point of view. At some point, they're going to run out of credit, and we'll see what happens. As far as the spending goes. And I'll get into a little bit what the PCE said today about spending. And it kind of ties together with what I'm seeing here, in credit card debt. So, like I said, delinquency rates are on the rise, with 11.4% of credit card balances having been left unpaid for at least 90 days. That's up from 9.4% over the same quarter in 2023. For other types of loans, 9.2% are delinquent for 90 days or more. So you're seeing delinquencies go up for consumer credit, according to the Fed. Meanwhile, 4.8% of auto loans and 0.7% of mortgages, 0.5% of student loans, and 0.5% of home equity lines of credit are delinquent for more than 3 months over the same period. Aggregate delinquency rates increased slightly in the first quarter of 2024 as December 3.6% of outstanding of outstanding debt was in the same stage of delinquency, up from 3.5% in the third quarter. Transitioned to serious delinquency, defined as 90 or more days past due, edged up for auto loans, credit cards, and HELOC balances, but remained stable for mortgages. Amid the surging delinquency rates, the Fed says that around 123,000 Americans had a bankruptcy notation added to their credit reports in the last quarter. Home sales. Okay, when you think about that, pending home sales came out this week. In the United States, they declined 4.6% from the previous month in January of 2025, extending an upward revised 4.1% fall in December of 2024, and much worse than the market forecast of 1.3% decline. It's evident that elevated home prices and higher mortgage rates strained affordability, NAR chief economist Warren Young said. New home sales of new single-family homes in the United States dropped 10.5% from the previous month to a seasonally adjusted annualized rate of 657,000 in January, falling short of the market expectations of 680,000. It marked the lowest level in 3 months as persistently high mortgage rates continue to dampen demand. So again, I know this is regional. It depends on what part of the country you live in. I know I saw a notation from Paul that, at least up in his area in the Northeast, that housing is still strong and demand is still strong up there. But you're seeing pockets, especially around the United States, where it's not that strong. Jobless claims. Initial jobless claims in the U.S. Rose by 22,000 from the previous week to 242,000 on the third week of February, the most in over 2 months, well above market expectations that they would remain stable at 221,000. And you would think, well, that's because we're going through, this DOGE and the layoffs in the federal workers. However, federal government employees laid off by DOGE are not included in state claims data, because their claims are filed separately under Unemployment Compensation for Federal Employees Program, which had 614 initial claims in that period. So we haven't even started seeing that yet from the federal government. So again, the Fed's looking at inflation and they're looking at jobs. And for me, the last peg in the stool is if we start seeing unemployment go up, that's when we're going to start seeing more of a recessionary flow into our economy. U.S. GDP came out. The economy expanded at an annualized rate of 2.3% Q4. That's the slowest growth in 3 quarters, down from 3.1% in Q3, and in line with the advanced estimate. Personal consumption remained the main driver of growth, increasing 4.2%. So people are still spending, when we say we're spending on the credit card. And government expenditures rose 2.9%. Remember, this was for Q4 2024. And then I see news outlets talk about, look, the new administration's in, GDP's down. Well, they weren't even in at that point. So, watch out for what the news says anymore and think on your own. So that's kind of the economic news. Not, it's all over. And if, the reports as we've been going through, headlines are usually different than what's inside when you look under the hood. So, always kind of take it with a bit of skepticism and look into it on your own and see exactly what's happening. But, as far as inflation and that, all you have to do is go to the grocery store and figure that out on your own. If we look at some equity news, okay, we had a lot of that this week. Bank of America said its clients bought U.S. equities for the third consecutive week, adding $2.2 billion. The S&P gained 1.5% during the week following 2 weeks of decline, and that was last week. According to Bank of America, both single stocks and exchange-traded funds saw inflows, with individual stock purchases extending to a 6th consecutive week, and ETF buying continued for a second week. They're talking about retail customers. Private clients remained consistent buyers for the 10th straight week, while institutional and hedge funds clients were net sellers. Private clients are typically big net buyers in January, but the recent buying streak is the longest of any start of the year since 2022, with inflows across most sectors except technology and consumer discretionary, Bank of America strategist noted. Meanwhile, institutional and hedge fund clients have been selling equities for most of 2025. So again, I think we talked a little bit about that last week, Paul, and you asked me if I knew it or if I read it. And that's, I get a Bank of America every week statement that comes through and kind of goes over how they look at flows. So that's where I kind of get that information. When when you look at earnings and individual companies, of course, last Saturday, Berkshire Hathaway came out with their annual letter to the shareholders and their earnings. And they released their results for 2024. They reported a profit of 89 billion, down a little from 96.2 billion in 2023. But the operating earnings, which excludes some investment results, rose to 47.4 billion. Its stock has risen to start the year. Both Class A and B shares up about 6% compared with the S&P's 2.2% gain. Both Berkshire's share classes closed at record levels in recent days. The interesting thing I saw in there, which we talked about it, why is Warren Buffett got 336 billion now in cash? And we talked about he has such a wide array of companies, either they own outright or in their investments, that he kind of gets a good gauge himself, I think, on what the economy looks like. And he put in his letter that Berkshire did better than I expected, though 53% of our 189 operating businesses, those are businesses that he owns, reported a decline in earnings. So over half of his companies reported declines in earnings. We were aided by a predictably large gain in investment income as Treasury bill yields improved, and we substantially increased our holdings of these high liquid short-term securities, he said, while also noting that massive tax bill the company has paid to the U.S. government. So he put all that money in Treasury bills. That's why his profits came down. And then he said 53% of his 189 operating businesses reported a decline in earnings. So he's looking across his dashboard of companies saying, wow, maybe I need to be in cash. So that's kind of what I take out of what he's talking about. Starbucks, Starbucks is a company where people have discretionary income, go pay for $7 coffees or lattes. They announced a major restructuring initiative last Monday that includes the elimination of 1,100 corporate roles across its global support team. This comes in the backdrop of Starbucks closing several stores nationwide throughout 2025 amid fluctuating sales and operating challenges. JP Morgan Chase executive told thousands of employees he wanted more hustle days after the bank CEO Jamie Dimon scorned staff pushback against its 5-day return to office policy. We need more hustle and scrappiness, Roanne Admin, chief product officer of the Chase consumer business, wrote in a memo to more than 25,000 employees last week. He cited a call for feedback on artificial intelligence that prompted fewer than 5 responses from 25,000 employees, and gave another example in which the internal bureaucracy blocked better results. So it's not only what we're seeing happening in the federal government. I think JP Morgan and you're seeing it happen in Meta and in Google too, that they're starting to ask people to get back to work and then be more responsive of requests that come from the company. Of course, the big thing this week was NVIDIA. And they reported fourth quarter earnings on Wednesday after the bell, and that beat Wall Street expectations. And the company provided strong guidance for the current quarter. Okay, but you see kind of what has happened in the stock yesterday. It closed down under the 200. Today, it's trying to surge back a little bit. NVIDIA delivered a 78% surge in quarterly revenue, okay, which for most companies is good. And Trent and I have talked about this, and we've all talked about this. It used to be, 200 and some percent. Then it was 185%. It was 122%. So the end of this triple-digit revenue growth in 2025 almost seems inevitable for this year. So it is double-digit, but it's not triple-digit. And what's more, it said its first quarter margins would tighten to 71% from 73.5%. We're seeing a couple companies talk about margin tightness, and that's lower than Wall Street's 72.2% estimate as it ramps up production of its new Blackwell AI chips. The gross margin forecast indicates a company's efficiency in managing its core production costs and generating profit. And for the street, that was disappointing. And I think that's why you see what's happening in a way with NVIDIA stock. Instead of, the next day it kind of popped up, but we had that huge candlestick. We'll look at it in a little bit. Huge candlestick, and then it closed under the 200. They're worried about margins. They're worried about profitability. They're worried about DeepSeek, basically. And we're seeing that across the board in, the Mag 7s. Okay. So the bar to impress is simply really sky high. After 1,800% stock price explosion over the past 5 years. So again, we look for these companies that you have to blow it out or it's not good enough, for their valuations. And Dell came out yesterday, forecasted a decline in its adjusted gross margin rate for fiscal year 2026, hit by higher cost to build artificial intelligence servers in a fiercely competitive market, while its PC business also lagged amid soft demand. Costly production of these AI-driven servers are weighing on margins. Dell expects its annual adjusted gross margin rate to decline by about 100 basis points. So again, more margin pressure you're seeing in Dell. Okay, HP fell more than 3% in pre-market trade after the company issued below consensus guidance. Okay, so we're starting to see a little bit of pressure. I mean, not that these companies aren't doing well, but we're seeing guidance coming down. We're seeing margin issues in the AI high-tech world. So really, investors and institutional skepticism has grown, over the billions that U.S. tech firms have channeled into AI infrastructures due to slow payoffs, which mean, no return. They want to start seeing a return on all this money that they're investing, and then the breakthrough of DeepSeek. So some of the market's most popular AI-linked stocks came down this week after analysts note flagged a possible slowdown by Microsoft on data center leasing, knocking sentiment in that sector. Of course, Microsoft came out and said, we're not doing that, but it really kind of hit the sector this week too. So again, we're starting to see, at least I am, in at least the mags and in some of these AI stocks, a little bit of slowdown, a little bit of skepticism, and that when you have 7 to 10 stocks that are 35% of your index, that's why we see what's happening in the Qs, the SPY, and the Dow to a certain degree. The PCE came out this morning, which is Personal Consumption Expenditure Price Index, and that's the Federal Reserve's preferred inflation measure, and it increased by 0.3% for the month and showed a 2.5% annual rate. Excluding food and energy, the core PCE also rose 0.3% for the month. It was 2.6% annually. Fed officials more closely follow the core measure as a better indicator of longer-term trends. 12-month core measure shows a step down from the upward revised 2.9% in December. Headline inflation eased by 0.1 of a percentage point. Goods prices rose 0.5 on the month. Okay, price of goods, so that's inflationary, pushed by a 0.9 increase in motor vehicles and parts, as well as a 2% jump in gasoline. Services increased 0.2%, and housing rose 0.3%. Personal income posted a much sharper increase than expected, up 0.9% of the month against expectations for a 0.4 increase. And here's where it's kind of interesting. The higher incomes did not translate into spending, which decreased by 0.2% versus a forecast of a 0.1% gain. So we weren't spending as much. And I go back to, what we saw in what's going on the credit side. People are actually starting to save more than they are spending. So we'll see if that comes through, in the economy, based on 65-75% of our economy is based on consumer spending. So it's interesting, this week has been interesting because you've had NVIDIA, you've had the AI, and then you have the narrative's been coming out, for a while about, the headline on the PCE was inflation eased slightly in January as worries accelerated over the president's tariff plans, according to the Commerce Department report Friday, and this was January's report. So really, the president has only been in there 10 days in January. So his tariff plans really had no effect on that PCE report. But I'm starting to see the narrative is inflation is going to go up because of these tariffs. But we've seen that back in the December Fed meetings and the January Fed meetings that they're worried about tariffs. And they're supposed to be data driven. We haven't even had a tariff put on yet that I know of until this coming Monday. NVIDIA even got into it, the headline. A top NVIDIA executive said the president's potential tariffs and export controls of its powerful computer chips remain an unknown, citing its stock sliding despite better than expected quarterly profits. So this executive is blaming the tariffs on their quarterly profits. Their quarterly profits were good. They're just not as, as percent-wise as high. So I think you got to be careful, of narratives, and we don't know what the tariffs are going to do. He put tariffs on before. during Trump 1.0, and it didn't cause high inflation. Okay, so basically what he's trying to do is have reciprocal tariffs. If you charge us 25% on cars we send to you, we're going to charge you 25% on cars that come in to the country. And a lot of these countries are now coming to the table and they're working this out, and tariffs may not even happen. But there are good sides to tariffs too that doesn't necessarily get talked about in the media or by anybody. So, the whole story is Trump may move to add even more tariffs on imports he views as important to national security, as his administration also studies how to implement reciprocal tariffs in hopes of bringing more manufacturing back to the U.S. and reshaping how international trade is conducted. In his remarks to reporters, President Trump said that the tariffs are already having a desired effect of bringing their workforces back within the U.S. Trump suggests that companies could avoid the tariffs by moving their production to within the U.S. borders. And so he hasn't even had a tariff yet. And here's what I went out and I just looked what companies are doing what for tariffs. And you look at DMAC properties, DAMAC properties. And on January 7th, okay, this is even before Trump got in there, but they knew he was coming. Trump revealed a $20 billion investment from Emirati billionaire Hassan Sawanji, founder of DMAC Properties. The funds will be purportedly directed toward developing data centers across multiple states, including Texas, Arizona, Oklahoma, Louisiana, Ohio, Illinois, Michigan, and Indiana. It's been amazing news for me and my family. When Trump was elected in November, we've been waiting 4 years to increase our investment in the U.S. to very large amounts of money, the billionaire said. And then we had Stargate, okay? Stargate initiative, it's an investment in AI infrastructure between OpenAI, SoftBank, and Oracle. Executives from the companies pledged $500 billion to build AI data center and computing facilities nationwide. And then there's Wellspun Living Company. This is a company from India, Home Textiles. Okay, so Home Textiles Wellspun is looking to expand its manufacturing footprint in the U.S. with an eye on being closer to customers of its largest market, according to Managing Director and CEO Dipali Goenka. We're in conversation to set up a utility bedding plant in Ohio, where we now have a pillow plant, she said, when asked about the company's manufacturing footprint expansion plans. Goenka further said, we will set up another plant in Nevada for manufacturing pillows in the U.S. Compel, okay. Well, what I'm going through is companies are already reacting, and to get around these tariffs, they're doing what Trump wants them to do, which is bring manufacturing back to the U.S., which will bring more jobs to the U.S., which will help the economy in the long run. So again, other companies, Compal Electronics, Taiwanese contract laptop maker, may expand into the U.S. and has spoken to several southern states about possible investment, CEO Anthony Peter Bondarno said in January, adding that Texas was a leading candidate, but no decisions have been made yet. Acidity, the Swedish hygiene products and tissue maker, could move more of its production into the U.S. from Mexico and Canada if tariffs were introduced, CEO Magnus Gross said on January 23rd. Hyundai Motors, South Korean automaker, said on January 23rd it planned to further localize production in the U.S. to minimize any tariff impact. It also said it would make hybrid vehicles its new factory in Georgia. Inventec, the Taiwanese company which makes AI servers that use NVIDIA, opens new tab, has begun evaluating locations for U.S. investment, favoring Texas due to its proximity to Mexico and power infrastructure. LVMH is a luxury conglomerate, is considering bulking up its production capacity in the U.S. CEO Bernard Arnett said. Samsung Electronics, the South Korean tech giant, is considering moving the manufacture of dryers from its Mexico plant to its plant in South Carolina, Korea. Economic Daily reported on January 21st. Stellantis, Chrysler parent, is moving forward with its plans to build a new midsize pickup truck in Belvidere, Illinois, it said on January 29th. Volkswagen, the German car maker, is considering setting up production sites in the U.S. for its high-end Audi and Porsche to avert fallout from tariffs. Handelsblatt reported on January 29th. Apple, this week, company announced its largest ever spending commitment, highlighting plans to spend and invest more than $500 billion in the U.S. over the next 4 years. The investment includes advanced manufacturing facility in Houston for artificial intelligence servers that support Apple Intelligence, a doubling of its U.S. Advanced Manufacturing Fund, and the creation of an academy in Michigan to train the next generation of U.S. manufacturers, among other things. It'll also add about 20,000 research and development jobs across the country at that time. According to the company, the 500 billion spending commitment includes Apple's work with thousands of suppliers, direct employment, Apple Intelligent Infrastructure, and data centers. We are bullish on the future of American innovation. We're proud to build on our longstanding U.S. investments with this $500 billion commitment to our country's future, from doubling our advanced manufacturing fund to building advanced technology in Texas. We're thrilled to expand our support for American manufacturing, and we'll keep working with the people and companies across the country to help write an extraordinary new chapter in the history of American innovation. That was Tim Cook. The announcement was teased after a meeting last week between CEO Tim Cook and President Donald Trump, and comes as the company tries to mitigate the business impact of Trump's trade tariffs, with a 10% tariff already in effect on goods imported from China and a 25% tariff threatened for chips. Eli Lilly said Wednesday it'll invest $27 billion to build 4 new manufacturing plants in the United States as the pharmaceutical giant grapples with the threat of drug import duties from the Trump administration. The Indiana-based company said 3 of its plant facilities will be dedicated to producing active pharmaceutical ingredients for its medications, while the 4th will focus on sterile injectable medicines, including the popular weight loss drug Mounjaro. Eli Lilly said the investment will create 3,000 high-skilled positions, approximately 10,000 construction jobs. Trump said this month that he planned to impose tariffs of 25% on goods, including pharmaceuticals, starting as early as April 12th, and he warned drug industry executives in a private meeting last week they should move production to the U.S., according to Bloomberg. So these are the things that I think that you see that markets say they're adjusting for. But if you see what he's trying to do is I don't think he so much wants to put tariffs on. He just wants more manufacturing back here, and he wants an equal playing field. If you're going to charge us 25%, we're going to charge you 25%. And so it's kind of the long game, I think, for the economy. It's like he took over a tanker that was going in this direction, and now he's turning it to a different direction. It just takes a while for the economy for that to happen. So we're in interesting times right now, and you're seeing it in the market. So that's kind of my rant today. I wanted to keep it to under half an hour, which I did. But I'm going to open it up. What do you guys think? I mean, this has been a pretty amazing 30 days, either way you look at it.
2009.
Is that what you think, Bob?
2009 is upon us. Exactly what Trent was saying about the refinancing and the mortgage rates is spot on what's happening. They're into 2%, less than 2% mortgage rates that are all refinancing now. Same thing had happened in 2009. It's just a matter of time. I'm in Florida now, and I will tell you that, and there's a lot of money where I am in Florida, very wealthy people. We have the PGA going on the 11th, so people are moving into this area right now for the PGA Cup.
TPC.
I'm sorry, TPC, but it's PGA. But it's what I see, and in my business, manufacturers are manufacturing products, but the distributors are not buying them. So the manufacturers are over manufacturing, and they can't sell the product. So just like cars and trucks, I'm not talking that comment was not based upon cars and trucks, but cars and trucks is the same thing going on.
Yeah.
Cars and trucks have come to a stop. They can't sell them. I mean, my dealer, who I get my cars from, which I told him he's not getting another car for a long time, he's basically, crying for my business. But my point is that I see signs of 2009 upon us now, and I think the stock market is in a correction phase right now. I think that we're starting to see a lot of cracks. And Zelensky's in the president's Oval Office right now, not to bring political to this, but at the end of the day, he's making a deal with him for all these
Rare earth
Mineral?
rare earth minerals that he's going to sign his life away to, because you know what's going on there. They're basically, Trump is holding him to the fire right now. But at the end of the day, I don't think the administration has really started to look at, the economy itself. I don't think they're focused on it. I think they're more focused on getting back and paybacks to everybody. I don't feel that they're focused on the economy. I think our economy is really in a very bad position. Look at the restaurants. I don't know how many of you can report on the restaurants, how well restaurants are doing. They're not doing well. At least up in northern part in New Jersey and everything, it's kind of very easy to get in a great restaurant. However, in Florida down here, at least in my area, I don't know about you, Trent, but at least in my area, it's pretty strong right now. And that's, again, a lot of people are in town for the PGA right now. So it makes it a little harder. But also I want to tell you that along the beach line, I used to walk it and count all the new not $1 million, multi-million dollar, $4, $5, $10 million mansions going up along the water. It's come to a halt. I mean, there used to be a dozen of them going up at one time. There's 2 coming to that are finishing, and basically no other shacks are being torn down to put these up. So that tells me that the real wealthy are not spending any money and cutting back on what they're spending their money on. And I'm hearing that through to the car markets too, the upper end car markets. They're not really going out and buying the expensive cars right now. They're holding pat. So my feeling is that we're looking at 2009. Also, banks are not lending, which is to businesses.
That's been going on for a while though, hasn't it, Bob?
Yeah, it's tightened up even more.
Yeah.
So it's back to 2009. Yeah, submit all your paperwork and everything, just to tell you no. Doesn't
Yeah, I
matter
think-
how good everything is, but we're just still gonna tell you no. Well, why are you even wasting my time? That's what's happening to a lot of businesses right now. And
Well,
in addition, people are extending their payments.
there's a lot of, I mean, there's a lot of debt coming due this year that's gonna have to be refinanced at a higher interest rate too. And businesses have got to be looking at that and going, okay, what the heck? Where's this money coming from?
But even mortgages, right? Mortgages are gonna double. People's payments are gonna double. They're gonna have to sell the homes.
Well, we're starting to see, new houses and pending house sailing, are starting to go down, as an aggregate in the country.
But
Is
you're
there-
seeing inventory go up.
Yeah, inventory's up.
Yeah.
Hey,
What-
Bob, Mark, is there a report or something that shows like how many people have that 2% interest? Because I'm just for example, like myself and 3 of my friends all bought houses in that 2% range, but none of us did like an adjustable rate. It was
Right.
a lockdown. So I mean, how many of those
lot.
2% people would have done a adjustable?
That I don't know.
Why is it-
So you get more house for an adjustable. Some people bought into houses they really can't afford. And
Oh,
what
gotcha.
allows you to afford that house is buying into an adjustable. I don't know what that amount is, but I'm sure that there's a statistic that you can come up with.
Gotcha. Okay.
So
What
back
surprises
in-
me a little bit is the amount of money that people are HELOCing, borrowing it against their house.
Oh, it's
You know.
constant. I mean, I'm not against generations or anything, but another key thing came out. Millennials, 50% of them need their refunds to make ends meet. I was shocked at that also. That was a shocking statistic that I heard on CNBC today. But
Yeah.
I think that a lot of people, to get a bigger house, they go into those arms. And that's the failure, because what happens is you got into that at 2%. Now you got to go to 4 to 7%, depending on your credit and affordability.
Hey, Bob, what did you mean by over manufacturing and distributors are not buying it? Can you elaborate a little more on
As a
that?
manufacturer, you're manufacturing products, anticipating that you're gonna get orders dependent upon the year or the year before that. Okay, and what's happening is manufacturers, to keep their people working and their machines running, are pre-manufacturing products they don't have orders for.
Okay, so there's less backlog.
Yeah, there's no
Less
backlog.
back. Okay, you're saying, okay, now I
Except for
understand.
military. Military is a different ballgame,
Okay,
but in the standard world, there's really no backlog. They have the stuff sitting on the floor waiting to ship out that they're not shipping out.
yeah, I understand. Healthy companies typically have a number of weeks, given their sector, of backlog to support the whole business model. I understand.
That's right.
Yeah.
And that has now flipped to where the distributor's not ordering the product because they don't have any demand to order the product.
Well, the distributor needs to be knowledgeable on that point you just mentioned. Like otherwise they don't know. You get an order, but you're like questioning the order because it's not based on a backlog. It's based on keeping jobs. So you're gonna like, perhaps you may not create a backlog to support it. Right?
So distributors
Yeah.
create demand for product, right? And manufacturers that need to meet the demands, right? So, and manufacturers have machines that are sitting on warehouse floors that have to operate along with people that are operating them. And what happens with a manufacturer to keep their good people and not get rid of them, they make them over manufacture product that they're expecting demand for, but really, in reality, doesn't come true because there's no demand from the distributor that's selling it to the end user.
So Bob, as a manufacturer, how are you addressing that?
We're just at standstill right now. It's, and I'm buying new machines coming in. So we're kind of just sitting and waiting. We're not expanding inventory. We're at idle because it's just not there. Demand is not there. And I've been telling you guys this for a while now.
Yeah. Well, I got a friend in the metals business. He owns a big metal fabrication shop, and most of his customers are big consumable, kind of things like grills and mower decks and those kind of things. And he says it's just dried up, and
Yeah,
and he's like, one of his customers just said, "Hey, just stop." And he's like, "Well, you've got a whole bunch of steel sitting out here that
yeah.
that got
And he's
ordered for
faced-
this product that's on you, not on me."
Yeah, he's faced with some tough decisions,
Yeah.
on those people on the floor that operate those machines. You can't continue to pay them if you don't have cash flow coming in.
Yeah, and that's true. And I was talking to him the other day, and and I said, "Well, how's it going?" Because he's got like 3 houses. He's got a couple lake houses. I said, "Well, how's it going down on the lake house on the border?" He's like, "Well, I might have to sell that one if things don't start
Exactly.
picking up." Yeah.
Exactly, because he's gonna need the cash to push back into his business to survive.
And he's already told me, and him and his partner, and it's a big operation, 7 buildings and 1,000 people, but him and his
Yeah.
partner have taken 6 months without pay now, you know.
So demand is
I
diminishing.
hear.
Times are getting tougher.
Yeah. Yeah, and it's been,
Yeah.
but it's been that way for a while. It's not like it just started this month, right, Bob?
Exactly,
Yeah.
and it's actually January even tipped deeper.
Yeah. Well, I'm
Okay.
seeing out
So
here.
We're 200 feet into the well before January. Now we're 500 feet into the well.
And we
you
got to
know?
start
Well, that's-
fracking.
Well, that's what, we see that here, in farm countries, these guys are getting ready to plant and buy fertilizer and, and fuel and equipment and stuff. And the costs are really high for them, insurance and all that, property taxes. So same kind of thing. They're like kind of wondering, and they've got grain bins full of grain that they're not selling, because the price is too low,
Too low.
too low.
I think what we're
Oh,
saying,
so they're holding the grain. Can they do that? How long can they hold the grain?
As
before it
long as
goes bad?
as long as you keep it dry, you're fine,
Wow.
Yeah. That's, I've talked to him. I said, "Well, why do you guys keep producing every year?" Then he says, "Because we have to." They go out and they get their loans. They're ag loans, and that's why the farm bill's so big, for these guys. And they get their seed and they do all that, and then they hope, that at the end, the prices are high enough for them to sell it. And back during the ethanol days, they were selling, corn really high, because ethanol companies were buying it.
If they
But
don't sell it, how isn't that just counterintuitive anyways? I mean,
well, my friend's pretty sly. He trades his on the options market, so he trades in and
oh,
out
okay.
on that. So he's really good at it, and he's very technologically savvy. He's got tractors that can drive themselves, and he can mow off a field pretty quick with 4 or 5 guys that it used to take 25 guys to do. So again, but everything, including manufacturing and even agriculture. And you look at the price of food, and you're like, well, these guys must be getting rich. Well, it's not on the farm side. I can tell you that.
Yeah.
So
I
the
mean,
assumption,
that,
the
that's a whole
assumption
nother.
here,
Go ahead.
I
I'm
just want to
sorry.
make, what we're saying is though, less demand reduces growth, and that's what essentially we're seeing now. The market is ahead of it. That's the premise of this conversation, right?
I think the market and the economy have always been kind of detached, you know.
No, I
But
know that,
eventually,
but that's what we're saying here. That's what
yeah,
I'm
Yeah, the
getting out of this.
market is
Yeah.
ahead, and that's what's happening right now. It's contracting because everybody, the analysts all know that the price for the shares of stock are way too far.
well, I
And
mean,
he has to get
yeah,
pulled back.
what's been pushing the market the last 3 years are, the Mag 7 and the 10 companies in the top 10 in the S&P. And we've always been saying, and we've been saying it here for a long time on our talks, if those start going down because analysts and investors and start looking at the valuations and saying, I don't want to pay up this much for NVIDIA or for Dell or for Microsoft anymore. And then the price starts coming down on those stocks because they're 35% of the market cap of the S&P. That's going to bring the whole market down. And maybe that's where we are right now. I mean, that's what I'm looking at.
Well, that's sort of the conversation I said to Trent the other day. I said the market's gonna shit the bed. That's exactly what I said.
Well,
I said,
I
"It's
think
going."
that,
And then he came back to me saying, we're not there yet. I disagree. I think that at any time now, you're gonna wake up one morning and it's gonna be that 2009 scenario where the market just falls apart because there are just so many cracks going on. I mean, the banks, right? Trent, on your thesis about banks and what's happening. This is 2009. I lived that. Okay.
So do I.
I was one of them. And at the end of the day, this is exactly what I see happen. And you're seeing more and more people putting their houses on the market because they have to. They can't afford the new payment in that house. That's going to be a big drag on the banks. When the banks crack and they fall apart, then you're going to see the market just like shatter.
It's
Well,
even including not just the interest rates, Bob, but as you know, insurance and property taxes are killing.
Oh, yeah.
My insurance and property tax now on the home I live in and I built in 1999 exceed my principal and interest payment.
That's nuts.
It
I
is.
got a car down here, an X5. When I shipped it down here, it was like $6,300, okay, to insure it. That same car up north cost me $3,500. It's double. It went from that year, from 2024 to the renewal, no, 2023 to 2024-25, it went to $9,500 to insure it in Florida. That is nuts. I'm shipping the car back to Jersey to register it and insure it in Jersey and bring it back down here again.
My truck insurance doubled. Can you guys hear me?
Yeah.
yeah,
Yeah, well, I live in Fort Myers, and insurance, home insurance and auto insurance. I sold my truck. My insurance doubled. So I just got rid of my truck.
Exactly. I mean, why anybody would pay $10,000 a year to insure a freaking car? I did for this
I
year,
would say
but I'm
do your
not doing it
homework.
My
again.
truck was only 2,000, but it was a 23 Tacoma. I mean,
There's a
I
would-
BMW X5. It's
I get around-
$3,500 up north, you know?
I get around that a little bit, Bob, because my newest car is what Jan drives. It's an 18 Escape. And I drive an 09 F-150, and those are my two newest cars. Okay. And then you go to an 03, then you go to a 66, a 94, so they don't
Yeah, I mean,
cost
I
as
have
much.
the toys too, but at the
Yeah.
end of the day, this is a daily drive. I don't even drive it that much. If I drove it, 6,000 miles while I'm down here, I do a lot more walking and other things than
Right.
actually driving in the car. The restaurant is, a mile down the road. It's not like I commute with the vehicle or anything.
Right.
I mean, it's just nuts. What's happening here in Florida is crazy. Go ahead, Trent. We stepped all over you numerous times.
Sorry, Trent, go.
All right, so here's what's gonna happen. I'm gonna lay it out for you, and Bob, you're right. It's the market's gonna shit the bed, but here's why. So if you go back to January of 2020, the 10-year yield was right around 1.78%. As we came into February, week of February 24th of 2020, the market started falling, yields started falling all the way into mid-March. Yields on 10-year treasuries got down to about 0.85% or 85 basis points. At one time in March, they were as low as 0.69 or so percent. And what happened was all this money came into the market. People started borrowing. People started buying their houses. Industry started borrowing. And you have this massive amounts of borrowed money coming in because it was so cheap. In the commercial world, institutional world, you borrow at 5-year terms. Flash forward to January, week of January 13th, I believe, of this year. 10-year treasuries at 4.79%. Today it's at 4.225%. Okay. All of those loans, 5-year term loans, are now coming due. And instead of financing them at a 10-year treasury rate yield of 85 basis points, you have to finance them at 4.2 plus the spread. These guys can't afford it. So what the banks and in government is doing is they're pushing the 10-year down. And I believe by mid-March, end of March, you'll see the 10-year down probably around 3.5% or 3%. And they'll give these guys the ability to finance this debt, refinance this debt. And it may go even lower, below 3%, which if you have a 5-year arm or if you're looking to refinance your house, could be a really good time to do it. But you'll see this pressure down. Well, the problem with all that is if you look at these comparisons between February 24th, the week of February 24th of 2020, and this week, you're seeing a equal parallel movement. And you're most likely will see a 20 to 25 decline between now and the end of March in the S&P 500. If you're using NVIDIA as your benchmark, you're going to be able to buy NVIDIA for around $90 a share or below. Okay. All of this has to do with money flow. There is no money available. It's too expensive. And now they've got to readjust this. They've got to bring this down. And that is what you're seeing. The other element of this is this quarter is one of the largest option expirations. Last Friday, we saw 2.7 trillion, or it represented $2.7 trillion in options expired on Friday. And that's when you saw after lunch, everything just fell apart. Today, you're seeing the same thing, similar amount of $2.7 trillion that it represents. When after you get closer to close today, you're going to see these guys, these market makers, unwind their positions, and they're going to start getting out. You're going to see more volatility in the market. If you look at the VIX, we're over 20 right now, which you get into this 20 to 27 range on the VIX. This is the chop bucket. This is where the markets really get volatile. Go over 27, we're in a crash. So we're seeing the reorganization of money flow. There is no money, and there has been no money in the market available since probably October. Because if you look at the S&P, and Mark's pointed out on the charts, we've been going sideways. We are now in the point of highly leveraged, deleveraging. We've got to get these yields down so these corporations and institutions and hedge funds can refinance this debt at a reasonable rate that they can afford. And the banks are shit in the bed right now because they're like, what are we going to do with all this property? What are we going to do with all of this, debt? And they default, and they're like, we got to stop this from happening. And it's, I believe, a concerted effort on the banks and the government to push yields down. It creates an opportunity. One, if you're on the short side, you can make money on the downside. But the long side, you'll probably come into April, May, June, summertime. It'll really bottom out third quarter. And all of a sudden, money will be cheap again. You'll see a re-leveraging of corporations, institutions, hedge funds, and individuals, and they will start borrowing again, and we'll see this thing start ramping back up into fourth quarter of this year, into next year and beyond. And I'm with you, Bob. This is happening. It's happening now. And the biggest thing that is different from 2020 is how big this option market has become and how much it's being used. And it creates enormous volatility in this market. So there's a great opportunity to buy good companies at cheap prices in the near future. But between now and then, this volatility is just going to go berserk,
And
especially
also,
this month.
Sell
I
your
think
positions if you have profits, sell your positions so you have that opportunity.
I think,
In my opinion, it's at least do something.
I think that, yeah, do something.
Not financial advice.
I think
There
that,
you go. Not
that
financial advice.
one thing that could throw a wrench in there is if we actually have a skyrocketing unemployment where people don't have money, and then all of a sudden, I can't afford my mortgage, I can't afford my car, and we're starting to see that already in the credit reports. Yeah, and then the other thing that we didn't talk about is the unwinding of the derivatives, which is as big, if not bigger, than 2009 right now.
Yeah.
Which are bets against all this, that go, insurance policies and bets that go into the quadrillions of dollars, I believe, right now.
Yeah. I mean, today it's 2.7 trillion in options will expire today. That's on crypto and equity related options. Yeah. That's a ton of money that represents. And because of the mechanics of when you buy a call option, like the NVIDIA 128 calls are one of the biggest chunks that has been bought. Those expire. Well, that market maker then takes that hedge off and he sells out of it. And that's what you saw last Friday. And I think you're starting to see it now. So I think this is where NVIDIA's earnings, tariffs, that has nothing to do with what's happening. This is all market structure. This is all about money flow. And it has been for a while now. So this month of March that we're coming into, this is a opportunity month. Just take advantage of it, but protect yourself in a big way. So that's my rant.
All right. I was supposed
I'm
to
not
say
going to
before
I'm not going to rant this on Kerry's call, just to let you know this is a exclusive platinum call because I don't want to get he's going on vacation.
I'm supposed to say before you say that, I'm supposed to say deep thoughts by Trent Grickmeyer.
There you go.
Bitcoin also dropped below 80,000 last night. Not good.
Well, it came back up a bit.
Still not good.
Well, I guess I got to look at how much it's actually gone up since November, you know.
Gonna
So,
go down
yeah.
into the 60,000s.
Well, here's kind of what I've been seeing.
Hey, Mark, can I just step in before you, I would ask Trent to maybe, if, this might be too much work, to create a diagram or a graph that shows the milestones, like loans and borrowing and the treasury and key dates and parallels that you're seeing. It might be an interesting thing that we could talk about.
Yeah.
I don't know
Yeah.
what everybody thinks, because it's a lot of information just poured out, but I'm more of a visual guy. And if you had the timelines and parallels and so
Yeah.
forth, might be kind of cool. I don't know.
I can
you
see
do
what
that?
I can do. That's a good suggestion, Paul.
All right, cool.
Thanks,
idea.
Paul. We talked a little bit. I know we were going back and forth yesterday, the day before, about Bitcoin, and I said, my line in the sand was the 200, and then I said this morning, it closed. It was under the 200, but I said, just technically wise, it's been outside of the Bollinger Band 4 days in a row, and it normally does not do that more than 5. And so I said I'd be looking to see if it pulls back within the Bollinger, and it's fighting to get above that right now. So this is how I'm looking at Bitcoin right now. If it can get back above that Bollinger, use the 200 as a line in the sand, then it has an opportunity to come back up, in my opinion. Okay. If it gets below the 200, it closes like a full candle and then comes back, retests it, and goes back down, then you're going to be in trouble, technically speaking. So I haven't given up that this is the line in the sand, which is right at 200 is at 82,000, which is what I've been saying for the last couple of days. But we'll see what happens, with Bitcoin. And again, Bitcoin is not an equity; it's a commodity. So you can't go to a balance sheet and and look at that per se. The same with NVIDIA. When you look at NVIDIA today, look at this candle yesterday after earnings. After earnings, it opened right here, okay, above the 50, and then it came down, and I was watching it. We were kind of commenting it. A couple of days ago, it tested off the 200. It went right through it and closed. And I said, well, this morning, I'm like, we'll have to see if it can get back up and over. But now you see it came all the way down to the intermediate support level, which it's done before, and touched it and come back up to where we closed yesterday. So I'm looking at NVIDIA to see if it will hold this level and start heading back up, or if it actually blows through it. But I'm seeing the Bollinger's kind of, evening out here a little bit. And we'll see what happens with NVIDIA. This may be, if you were a high risk trader, this may be something you look at. Let's go back and we'll look back and see how this line looks. You can see it had some issues there. It did pop through it back in this area, but we'll see. Is it something that I would trade on? It's out of my risk tolerance right now for NVIDIA, but you can see where at least it hit the support level. And if you look at that chart, and we look at just the SPY, the SPY's 1, 2, 3, 4, 5, 6, 7 down, following the Bollinger right down. Okay, and it's like Trent was saying, we've been going sideways for a while here, and there's the 200. The oscillators are still looking down. And again, you start losing the Mag 7, and here's Meta, okay, one of the better performers, and it's fighting off the 50. You look at Google's below the 200. This will be the third day. I mean, this is why we're seeing the markets go down. These guys are dragging us down. Microsoft, same thing. Microsoft's been below the 200 for a while. Here's the 200. Okay, if you were trading this like Paul Tudor Jones, you would have gotten out, and you'd still be out on a long-term investor kind of situation. Amazon, look at that. I mean, it just went whoop, and just like a slippery slide heading down right along the Bollinger. Again, we got another crossover here, the stochastic. But as we like to say, Paul, there's always an opportunity somewhere, right? Here's Berkshire.
I'm in Walmart. I bought Walmart this week, and I'm positive.
Well, I mean, here's Berkshire, and here's where we put it on a list, and it,
Mhm.
you know, it's Berkshire. There are, but I mean, there are fewer and far in between. If you are a swing trader and if you have a plan, here's Paycom, okay? And Paycom went up, and it's just kind of bouncing between the Bollinger and the 9. Okay, I'm seeing some rounding out here, so I'd be a little more, but they are out there. Let's look at Walmart. Walmart to me is just too close to that green line of death for me, Paul. But I understand you trade it differently. But I got Walmart underneath the MACD,
I'm
which
not
I
in it.
don't like. What's that?
I'm in it.
I'm not in it.
Okay,
I'm in it.
who's in it?
Trent.
Oh, Trent's in it.
Dad
You're
bought
you're in
that
Walmart?
earlier this week. I'm
You're
in
in Wal-
Walmart.
Okay.
I'm looking for where do rich people go when they're broke.
All right. I'm just looking at technical charts, and I'm looking at a MACD that's not looking very good, and
Yeah.
an RSI. So, you know, if you're an investor, you have a different set of criteria
Yeah.
that you
That's
follow.
it.
So,
It is this, and I bought Pinterest, PINS, and DraftKings. DraftKings, I'm not down a bit. But it's more long-term outlook. I'm looking at the next 3 to 6 months. So I'm looking at quarterly revenues and earnings.
okay.
Technically,
Looks
doesn't
bad.
look great,
Yeah.
but
We had some, well, I was talking about, you know, the last couple of days, some of the defense stocks, which are like Lockheed Martin. If you have to be in the
Mhm.
market, at least the technicals look pretty good. A little bit of sideways, but you need to get past this 20. But again, we've got Bollingers that are converging, and I'm just trying to find something out there. And here's General Dynamics. It's actually traded above it a little bit, but you know, those kind of things out there. Here's one we had on the under 200 list.
Slim pickings.
Budweiser, okay, which we put on back here and then got out before earnings, but then earnings came up and boomed up. But Budweiser was doing pretty well till it hit the green line of death. That was on our under 200 list. Mondelez was doing pretty well. It's still, you know, bouncing off the support level, but again, we got sell orders here. So, you know, there are things out there if you want to trade. It's not like doom and gloom across everything, but it's a lot harder to find these days. IWM. This is the Russell. Okay, these are the guys that are going to have to go refinance the loans that Trent was talking about right here.
Yeah.
This don't look good at all. Okay, and you can't get much worse than down here. I mean, it's still going. And
these are the guys who are going to drive their college cars because they kept them after selling their Ferraris to Omaha, Nebraska, to see if they can get a Buffett bank deal. That's where those guys are coming from. Yeah. I think there's an enormous amount of challenges ahead. Look at TLT. I'm just curious.
Yeah, we had that on the list a tad bit too. Okay, hold on.
Mm-hmm.
Oh, this is home builders. You can see what's happening to them since they hit the 200 here. Just not very much fun in home builders. TLT's come up, pretty much hit some resistance right there.
Yeah.
Why do you think that happening?
Well,
On TLT?
Yes.
Well, the
On
yields have come
PLT.
down. The yields have come down on the 20 and 30-year bonds. So the price went up.
So you think that's part of a rotation?
Well,
No,
didn't
I
we just
think
have it? Didn't
I-
didn't our yield curve just invert again?
Yeah.
Yeah.
I think this is
What do you
this
think,
is
Mike? What do you think, Mike?
I don't have an opinion. I'm asking you. I'm curious of why this is going up and everything else is going down.
well, because
because
the yields
they're
are
pushing yields down.
yields are going down, so price is going up.
They got to push them down. They
Yeah.
got to get they
So
got
you're
to get
saying the
refinancing
liquidity
in
is
line.
pushing this? Is that what you're saying?
Yeah, I'm saying is you have a situation of trillions of dollars that could be that could default this year, and they got to refinance because it's been 5 years since they bought or they financed it their debt, and now it's coming due, and you got to push these 10-year treasury yields, these 5-10s. You look at the twos. I mean, you're down around 4% on the twos. This is instead of lowering Fed funds rates, you lower what you benchmark your loans against, and that is U.S. Treasury bonds, 10-year bonds. You drive that down, you can then you stack your spread on it, and then you can refinance that debt. So right now, if you're you got $1 billion loan on property that actually worked against you because everybody went home and worked from home and never came back, and you had cash flows tight. Now you're financing that at say 1.1 or 5.25 to say 6.25, and if you have shit credit or you're then as a company, then you're probably in the eights. Well, you're refinancing from back when it was 2-3%. Now you're financing at a higher rate.
Trent,
You're going to get crushed.
Trent,
And
you're
these
off the
banks
board.
recognize they don't want it.
So
Trent.
who's pushing down the rate then and going
You-
into TLT?
Trent.
Who's actually driving this? Is this a part of QE2?
I think it's
Fed?
banks and government.
The government.
I think
So
it-
the
I
Federal
think it's
Reserve is
banks and
pushing
government.
this rates up on
Trent, your
TLT.
numbers aren't reasonable for
Why?
companies. Because companies are refinancing now at 9, 10, 11%.
Oh, okay.
Okay, not at 7%. It's not happening. Okay.
Okay.
So the spread is
then
getting
you
wider,
really
right,
have to
Bob?
push this
So
down.
it's funny how Mark said his friend is selling one of his houses. He's doing that because he has to, because he doesn't want to go to the bank and borrow the money.
Liquidity.
So he's selling the house
Right.
to put the money back into the company to keep it afloat. If he doesn't do that, he's going to have to go out and pay 12% for this money. I'm faced with the same thing. I'm putting my money in. I'm not selling anything, but I have money on the sidelines. I'm putting more money in the business instead of going to the bank and borrowing it at 11, 12%. Fuck
Is
that.
that
So
because you have high inventory, Bob?
What's that?
Is that because you have high inventory that you can't turn over?
No, I don't have, I do have high inventory, but I'm not producing more. I'm
Right, so you don't have the
sitting on
cash
what
flow
I
coming
have.
through.
There's no demand.
So
It's cash flow.
Bob,
It's
you're
basically-
supporting my point.
It's cash
You're
flow, right,
supporting
Bob?
Right, but I'm saying your interest rate is wrong.
Yeah, I
Right.
agree.
And that's why you have to push these yields down.
Yeah,
That's
I
why this
agree,
has
but
to
they're
happen.
not gonna go down, Trent. The problem
They're
is
not.
going
our
down
country
now, Bob.
debt, our debt is too big. That's the problem.
Yeah.
The Fed is
They're
not
really
pushing these
screwed.
rates down.
You
The
gotta
government is
get
not
rid
pushing
of
these
the
rates
debt.
down.
If you can't get rid of the debt, the interest rates go up.
Yep.
Just maintaining the debt they have is $1 trillion a year for
But-
just servicing it.
What
Agreed.
you need to look at is the spread between the bids and the asks on the bonds. When the spreads are narrow, that's,
And by the way,
That's
guys,
wrong.
I'm sorry, by the way, you should check out the fireworks that's going on in the Oval Office right now. This guy's an asshole. They're doing this on media. I'm not talking about Trump, but Zelensky's an idiot.
he's
What's he
covering
doing?
his ass.
And it's driving the market down. If you
Yep.
saw before, it drove the market down.
What are you
This
watching
guy-
there, Bob?
This guy's crazy. Anyway, go ahead.
He wants his gravy train. He doesn't want his gravy train to stop.
Yeah.
What are
Yeah.
you watching it on?
I'm seeing, it's on live now. It's unbelievable. You guys see
Well,
this.
that's why I titled my rant today, Bizarro World. Everything is bizarre right now.
I'm just saying, you know, people who own companies, I'm not talking about Apple and the rest of them, you know, but you're gonna see that too, because as people don't have money, they're not buying that $1,100-$1,200 phone anymore. All right, I said my piece.
No, I think why isn't the Fed lowering interest rates on their what they loan to their banks? Well, because inflation is going up, and now they see that the potential for job market, unemployment going up, so they can't. They're
Well,
stuck.
because of the federal government. This is
Yeah, they're stuck.
You and I spoke about this many, many times over the last 6 months. It's
Absolutely.
all this hires were the government and healthcare. Well, all the immigrants are getting kicked out now. So we don't need all those medical people that they hired and all the hospitals to service them. So now the hospitals are overstaffed and they're going to have to cut back. That's the way it goes, right?
And you also have a tremendous amount of dollars floating around that is leveraged, and it's time to pay the piper.
Yeah.
So, what you were saying, Trent, in the short term is probably correct, but it ain't gonna settle. We're entering a bear market. It's going
I
sideways.
agree. I
It's
agree.
not gonna get rosy in the summer.
I don't think it'll get rosy in the summer. I actually don't think it'll start getting semi-rosy until the middle of fourth quarter.
Probably longer.
We're going to be pushed into a recession, and you're going to see it led by the equity markets.
Well,
You're going to see it by the bond markets.
And you're already in a recession. The numbers haven't been there to back it up because they've been being covered up by the previous administration to make it look better than it is. You got an
Manufacturing's been in
18-month
recession for a
window
while.
for this to
Yeah,
straighten
that's
itself
not gonna
out.
come, that's not gonna come around. That's been going on for a long time now. It's been, the ISM's been below 50 for a long time. It came up in Chicago from 41 to 46. Below 50 is even, below 50 is contraction, and above is growing. We haven't been growing, okay? The only thing that is doing well, it has to do with government military. Other than that, which is going to come to an end too, according to what Trump is saying, how he's going to cut military. But considering what happened today, I don't know. Things may be a little different.
So if housing goes down, that'll be another, peg in the recession.
Isn't that happening? Like new home purchases or something was down this week?
It's
starting going down.
Yeah.
The numbers been going down for a while now. It's not just this week. It's been happening for a couple of months. New housing.
More than that.
And in Florida, Trent, as you know, most people are buying the new homes because there's so many of them going up. That's coming to a stop too. That's slowing down.
Yeah, I have a buddy of mine who got wiped out in the housing market. He's gotten himself back in place. He's back at it. He's now sitting on $2 million, $5 to $10 million homes, and they're not moving. He's been sitting on one for about 8 months now. And he's like shitting his pants. He's like, I can't do this again.
Yeah.
Luckily he's learned a lesson. He's got money aside, but
that only lasts so long.
What you're seeing is Adam Smith's invisible hand. The market will clean out the fluff, and you're going to see a lot of people get their asses kicked.
Well, we've talked about that, how, recession is a natural part of the business cycle and the economy. And we have, since the great financial crisis, with lower interest rates, zero, tried to not have recession. So it just keeps getting bigger and bigger and bigger. And so when it does go, you know, it has the potential to be worse than the great financial crisis, in my opinion.
Yep, you're right.
Yeah,
It's gonna be worse because you're gonna clean out all of the greed that has been sitting there.
Well, it's got to reset.
Look at the chart of the Magnificent Seven.
Yeah. Yep.
There's too much money chasing too few goods. And
yeah. And it's not to say those companies are bad companies, they're good companies.
not at all.
It's just, it's
They're
a cycle.
overvalued.
There's
Yeah,
too many
it's a
people
cycle.
buying and expecting to make a fortune on it.
I always, Mark and I have talked about this over the last couple of days. When Warren Buffett years ago said the average person should just buy the S&P 500 and that is their investment vehicle. When he goes and sells the S&P 500 out of his
Yeah.
book of
Red
business,
flag.
oh,
Yeah, we talked about that, but like I said, I'd read his reports when they come out Saturday. I called Trent right away and I said, you know what he did? And then we put it in a couple of our videos, and I think I even put it on the Discord that he's done that. And you're right. You know, this guy's sitting around, you know, Berkshire is one of my biggest holdings for a long term. I mean, I've told you guys that. He's not an idiot. He may be old, but he's not an idiot. You know,
He knows it's coming.
oh, he's probably drooling at McDonald's right now, getting a sundae, going,
No.
oh, I'm gonna load up on more Big Macs because
that would be that would be
making
Dairy
money.
Queen. That'd be Dairy Queen because
Or
Berkshire
Dairy
owns Dairy
Queen,
Queen.
sorry.
Yeah. I just ate there yesterday.
Dairy Queen?
Yeah, Berkshire owns it, so I
Uh,
went down and
okay.
supported my own company.
God,
But
10
anyway, that's
10 o'clock in the
own
evening
that.
blizzards, they're perfect.
Yeah,
Jan
blizzards are-
loves those things. Yeah,
Yeah, I love the blizzards.
yeah. So
Yeah,
anyway,
so
anyway,
They
he's
got
got
cheap
his.
they got cheap at putting the Reese's pieces in there, you know? They cut back on that.
Hey, real quick, because I know we're coming up on the hour, I just want
We
to
are.
let you guys know. I don't know if you've been seeing the emails, but starting Monday, 7:30 Central Time, Mark and I are hosting what we call the Morning Edge, and that is a 30 to 45-minute discussion about today's market conditions. Mark and I will take about 5 to 10 minutes to sort of set the stage, what's happening, news, that kind of thing. And then we're going to open it up to you all. And we want you guys to bring ideas to the table, why you like it, time frame, any news items, anything that we can use during the day for those who are, no matter what you are, invest long-term, short-term, whatever it is. But this is what we want to sort of mimic the whole idea of how like institutions and hedge funds have a morning meeting, they discuss ideas, and then they go to work. And we're opening that up. For platinum, it's free, it's part of your subscription. Gold members, it's an upgrade fee, and then anybody who just wants the morning edge call, it's an addition, it's a flat fee. But for you guys, we'd love for you to join in if you can. I will be recording it, and I will be posting it up on the website and the Discord for you guys in case you don't get to make it. You can review and watch it. So
7:30 Central Time.
correct, 8:30 Eastern.
Hey,
Or
Trent,
what is that, sir?
Trent, when are we gonna update the tribe picks?
Oh, let me show you. Hold on one
That's what I
second.
see on Discord is the 29th of January.
Oh, sorry about that.
Ah, shit happens, Trent. Can't be perfect.
Every effing day.
Anybody who says they're an expert or perfect, you can call them a liar to their face. There's no
Thank you.
such thing.
Okay. Let me know when you guys can see this.
Yeah. There it is.
There you go.
All right. So Paul, you're in the lead today.
Is this up?
Spotify's at the top. Huh?
Is this updated? I don't think so.
This is live.
It can't be because Berkshire it shows at 442.
No, that was the price the
Oh,
day.
okay.
Anyway, time.
Okay.
It's 5:05 as of the update.
Okay.
So we've had a big change. Manny was up at the top for most of the from most of the month with Ripple and a handful of crypto, but since then we've seen a sell-off. Right now we're at a negative 8.2% since we started. But winners right now, Paul's got the first and second stack with Spotify and Palantir. Mark, you're in with Berkshire. David is at CrowdStrike. And then Ganesh, if I pronounce that right, he's got Samanto, I can't pronounce it, SMFG, as well as MUFG. I'm in with Meta, but I see that falling off. Mike is moving up with his gold and as well as his gold GOEX and his Targa Resource Group TRGP. I think Mike had another one with silver as well. I have high yield. I'm hanging on with high yield. Esther with Boeing. Good play. Scott with Urban Outfitters. It has fallen a bit. And then we get into some red, where, as you can see, my Tesla ate it. Manny and is down with Stellar Luna. And a lot of the crypto is taking a hit. And Navitas, a lot of the tech stuff is getting hammered. Microsoft. So overall, there is a link on the Discord, and I will paste this up here in a second. But there is a link that you can click on, and it will take you to this page. So it is also available. But yeah, we went from double digits in January to now we're down single digits. So we'll see how this plays out.
Yeah.
Where's the link?
It'll be interesting. We got 10 more months. It'll be interesting how this thing plays out.
Yeah. Mike, it should be on that page on the Discord. I will double check, and I will also get this put up as well.
Oh, it's the
an
Google
update for
Docs
it.
link? Is that the one you're talking about?
Yes, sir.
Okay.
Yeah.
Okay.
Yeah, but
Easy enough.
I'll put it up there again.
It was buried in the
At the top.
thread. Yeah, in the thread.
Yeah. Oh, okay. Yeah, I'll update that. But no, it's interesting just how we've gone from super aggressive on the crypto side. Now we're rotating a bit. We're seeing conservative on the golds, and some that area is starting to move up as well. So Berkshire kind of thing.
An interesting thing on
but
the gold and the silver, they were getting sold off yesterday too.
yeah,
And that's an indicator of liquidity, people needing money. Because
Yeah.
that's your true area of safety. So, we're in a risk-off environment.
Definitely.
totally.
Yeah.
Oh, yeah.
It's going to get worse, guys.
Yeah.
Buckle up.
Okay. Anyone else?
Oh.
We got about 5 minutes left. I appreciate everybody. This has been a fascinating day and great conversation, which I expect on a Platinum Channel call, and everyone who contributes. Anyone else have anything that we missed? Anything?
I've got a question for Bob.
Go for it.
Hey, is your distributors like Fastenal?
Fastenal buys from me, yes.
Yeah, okay. And do you do cold heading? Is how you do your screws and stuff?
We don't do any heading.
Okay. I'm just curious. I used to work for an industrial supply in Chicago, and we would there used to be a lot of cold heading in Chicagoland.
There is, and it still exists for most part, it exists for military. You have to do the cold heading.
Can you explain
But
what that is?
I can just buy blanks, cut the bolts to size, and then thread them.
You do that with screw machines?
Yeah. Yes.
Oh, okay.
Can you explain what cold heading is for people who don't know?
So cold heading is where you get the rod and everything comes in, and the head, the dies form the heads,
And it's loud,
and it's noisy.
loud and dirty.
Yeah, because you mostly cold heading is done on grade 8s or grade 5s, grade 8s, and it's hard steel. 10.2. So, and if it's special, if it's titanium, that's a whole nother ball game.
Cool.
It was interesting for me, but I just wondered. I was just curious.
Yeah,
Thanks for letting me know.
yeah. It's too much. It's just like you can buy now today. You can buy the blanks and everything, and then cut them and roll them.
Yeah, we used to do a lot of work with screw machines too back in the day. Those old screw machines, a lot of them in Chicagoland.
Yeah, they're still there. A
Yeah.
lot of them are updating to the new equipment, which is all automated.
I used to
Where's
have
your
a lot of
factory?
One person can
I'm
run
sure.
25 machines.
Bob, where's your
Yeah.
factory located?
I'm up here in New Jersey.
Yeah, whereabouts?
I'm in Edison,
Edison, okay. I'm north of there.
right at Raritan Center.
Raritan, okay.
Raritan,
Yeah,
yeah.
I had a lot of suppliers when I was in procurement up in Chicago, Elk Grove Village, machine shops and everything, passivation houses, all that. So it was fascinating to go up there and see all that.
Yeah, they
my
used
father
to.
was in manufacturing purchasing, and he was always going in the Midwest, because that's where 98% of it was
Yep,
produced.
yep. So,
I
okay,
had a
anything?
situation. I had a situation in Toledo, Ohio, where there was a number of shops making molds for plastics. And then all of a sudden, like everything goes to China or Mexico, and all of my competitors, including me, have stopped.
That's
It was just
changing
like-
now.
Yep.
What am I doing now? I'm
No, I said it's
retired.
changing now.
Huh?
I had a buddy that had a mold shop in Indiana. Actually, he couldn't. I forget. He got put out of business by China too.
Yeah.
So they just couldn't compete.
Well,
Doing
we had a
anything for the
situation-
government, it can't go to China. It has to be made here in the USA.
Yeah, but that's
China
gonna be a
was
lot of
charged-
money for tooling.
entire job,
Is what it is.
what the cost
I
of
know.
material was for me.
Sorry.
Right.
You know, that's what you want as an economy, is to see that business to come back. You're gonna see, over the next 6 months, you're gonna see a spike in unemployment, which is gonna freak the hell out of the market. But the more of these things that start building up to bring back these manufacturing, you're gonna have long-term growth in that sector, and the materials and the industries and what have you. That's gonna be the driver of what Trump is trying to do. He's telling China to go fuck off,
That's right.
which is great.
I love it, Mike.
Yeah, but yeah, I mean, Bob, between you and me, what the government did in the early 2000s to any manufacturing was the most despicable actions I've ever seen.
Mm-hmm. Yeah.
In the 90s too. We
Yeah,
went through
well,
that. Yeah,
That's why they call it the Rust Belt, right? You
yeah.
let that go down, you can do it a lot cheaper overseas. Well, those companies overseas are getting screwed now because they're gonna get hit with this 25%. Oh, guess what? Good. Now it's gonna cost them a lot more to produce, to get that product here to us. Well, guess what?
It's
The
not
invisible
25.
hand is going to make the adjustments.
It's not 25, it's 45 now.
It should be 95 or 100. Screw
Agreed.
China.
I get a concern that the reason why we move tools over and so forth is to make the products less expensive. And you see the Americans have a certain standard of living, a very luxurious compared to many other countries. So when we move all those that work overseas and we maintain this certain standard of living, and you go to China, for instance, or other places, they don't have quite the standard of living. So that whole thing is going to be reshuffled now.
Well,
And I don't know where the chips are gonna fall, but it's gonna be, I think, painful to bring that product back. And we're gonna
it-
have to live and feel through that pain. But it's not. I'm not even sure if it's entirely doable. You know, on some sectors it is, but I just
Well,
see
like mold
it's unknown
like
No,
mold
territory.
no, how do
makers.
you mean, what do you mean it's gonna be painful? Painful in the way that we can't get product and it's gonna be expensive to get it in
That
the
the mid,
meantime from China? I
I
mean,
think the
they're,
middle
they're,
class is just no. I think the middle class is gonna suffer a lot to withstand that wave of bringing products being made and afford those products.
I
Like
think they're
we're gonna
suffering
lose a lot of
I
now.
think we're
luxuries.
suffering already.
yeah.
I do
But I think
too.
that's the tip of the iceberg. I think it's gonna get a lot harder
Yeah.
for
You
and a
know, the
lot more
thing is, like
customers.
those mold makers, those great mold makers are all old. I mean, they're what are they gonna? You know, I
There
know
are
they
no
got
model maker and
automation.
mold makers. There are none. You can't even.
Tool and die
You can't.
guys, they're all
No,
gone.
they're all gone. All that
Not all
expertise is
gone.
gone.
They're not
I
all
have
gone.
to say, I think this is the greatest thing to happen.
Yeah,
And
I agree.
as long as if they follow through,
You're seeing a
yes,
shift. You're
there is
seeing a
gonna be
rotation.
pain. There's been pain already for the last several years,
Yeah.
and it is intensifying.
Decades, Bob.
But the
Decades.
strong will survive it. They're always.
China will
it's always
collapse
gonna
under
be-
its own self. You realize that, guys. They've expanded too fast, gave too much money out to the cities. All the people living in the country, they are not getting ahead.
I live in the country.
Yeah,
I'm glad I do. So,
yeah.
um,
All right, guys,
I gotta bounce.
we gotta wrap it up.
I'm out.
good conversation, guys. I really appreciate
Take care.
everybody. And hopefully we'll see you Monday morning. We'll see how that works, and we'll go over charts and thoughts, and you know, see how it goes. I'm looking
Gonna
forward
send
to
a
it.
link.
Trent, you're gonna send a link, right?
Yeah, Sunday night at 3 Central, I'll send out an email to everybody who's in platinum. And then I'll send out again at 7 Central on Monday morning and then each day. So you'll get a reminder. And if you don't get it, look in your spam folder.
Trent and Mark, could you pick the better time? The pickings are pretty slim.
Well, you know, they are slim. You should try to be me, because I got to sit there and try to find, 3 watch lists full of stuff. And sometimes it's just not there, Paul. It's just not there. So you're
I know.
patient, and that's why we have Treasury Bill Tuesday.
Yep. Yeah.
That's what I did
Yeah.
that's what I did this week, is I just put money in Treasury bills.
But you know what I mean. It's
Absolutely,
it's-
absolutely. So,
All right.
well, if you
See you
find
all
anything,
later.
bring it on Monday. Otherwise, we'll see you
Thanks
guys
a
later.
lot, guys.
Yeah, thank you. That
Have a
was
good
fun.
weekend.
A lot
Good
of fun.
meeting.
Fun.
Yeah, thanks
See you
for being
later.
a part of this.
Bye.
See you later.
Bye.
Bye.
Bye.